morning and good afternoon, depending on where you're joining us from. My name is Raphael Zindi. I help lead our global insurance solutions here at S&P Global Market Intelligence. I will be joined by Patricia Ken, who is the Marine Head at Swiss Re, Captain Rahu Khanna, who's the Global Head of Marine Consulting at Allianz Global Corporate and Specialty, Jarek Klimczak, who is the Senior Risk Account Consultant at AXA XL, sitting within the Marine Risk Management team, and George Deveresi, who is our Risk and Compliance Product Director within the Maritime and Trade space at Global Market Intelligence. And I guess I'll just conclude by saying, insurers have got a strong role to play in terms of, building a more resilient, inclusive and sustainable society. And here today we're to address, some of these challenges and, what is it that we can do to bring these forward. George, perhaps if we start with you, I think you've got 3 points you'd like to address and share with us in terms of, what are you seeing from the clients you're speaking with and some of the general market trends.
I just want to touch upon a few areas that we see repeated across sort of all business lines that people are concerned about. And so the first area that I wanted to touch upon, which is obviously of concern for insurance, is knowing where the vessel is, that you underwrite, that you broke, that your claims handle on. And obviously, the way that we currently do that is through AIS, automatic identification ship. And I don't need to tell this to this audience, I'm sure, but obviously AIS was never ever designed to be a world tracking system, and so it is very much open to manipulation by the crew, and we have seen that most notably in the previous couple of years around sanction evasion towards Venezuela, towards the Democratic Republic of Korea, and also now looking around the Ukraine. We have many examples of vessels manipulating their AIS from changes as destinations, changes in draft. But one of the very common ones we saw, especially sort of during the pandemic, was vessels going dark, so not receiving a signal for a prolonged period. One classic example is vessels coming on a very traditional navigational track from sort of India up across the Indian Ocean, Suez, through the Mediterranean, going through the Straits of Gibraltar, but then going dark for at least a month and a half, and then reappearing off the Cape of Good Hope off South Africa. And during that period, there's obviously been changes in drafts and stuff like that, and questions had to be raised as to where that vessel had been for the last month and a half. They would have claimed they'd done a slow steaming down the west coast of Africa, but on close analysis, it has been found a vessel have been sanctioned for doing such a long period of AAS blackness, because they have been found to be doing runs into Venezuela, for example. So that is obviously an area of concern. It's an area that we've got to be alive to and figure out as a collective how to better improve the tracking of vessels, so that underwriters, insurers, claims handlers, brokers can be better versed as to what, in inverted commas, is normal, where these vessels trade, where they operate, and therefore how to better understand those risks that they are writing. Next point I want to touch upon, obviously, is the war in Ukraine. Obviously, it's very dynamic. It's a very live thing. We especially saw that at the beginning of the conflicts back in February with the multiple changings of the Joint War Committee zoning around Ukraine and the Black Sea and the Sea of Azov. That's now obviously stabilized. But what we are now seeing, and yesterday is a case in point, with and I'm going to butcher the pronunciation of the vessel's name, the Sibek Saloy, being impounded by the Turkish authorities after bringing Ukrainian grain out of the country illegally. And I think this is something we're going to see more and more of as the Russians obviously now control Mariupol and look to push towards Odessa. This is something that we're going to have, as a community, going to have to be alive about how we track vessels in there, how the NATO navies operating around the area. Obviously, Turkey's doing a fantastic job blocking the Bosphorus at the moment and controlling that access. But again, it's certainly an area that we're going to have to be alive about, both for vessel movements, but for particularly cargo claims and war risk claims and the like from there. And finally, because the last point I want to talk about, and this all encapsulates all of the other two, is the supply chain disruption that we've seen on the back of the pandemic. Had a report in only the other day that's saying for container ships, only 36.4% of container ships have actually made their global port schedules since July 20. Since June 21. Obviously, it's improving, but it's less than half the average schedule of reliability since 2019, since pre-pandemic, and obviously that has a huge knock-on effects for the insurance business, not only for the cargo insurers, be that sort of those that insure the cargo within containers, within vessels, but also for hull machinery underwriters and claims handler and brokers when you're looking at vessels idling outside of ports or at anchor, and obviously the wear and tear that inflicts upon the vessels. So again, the monitoring and understanding of the global shipping routes, how vessels are interacting with ports and how congested these ports are of critical importance for the industry to make that holistic underwriting of risk as best as it can be.
Fantastic. Thanks, George. Let's perhaps look at what's happening directly with the safety and operations piece. George talked about tracking of vessels, perhaps things like lost vessels out at sea. And I think there was a fantastic study the Allianz Group put together, which was really looking at the safety and operations piece as part of the safety and shipping review. And one stat that came across and particularly stuck with me was during the early 90s, global fleets were losing over 200 vessels per year, and this has significantly dropped down to sort of 50 to 75 per year over the last 4 years, which tremendous to note, but how can we continue to keep those losses down? Maybe Rahul, if you want to speak at what are some of the findings you saw from the safety and shipping review that you run recently?
Raphael, as you mentioned, our annual safety and shipping review highlights some of these key trends and risks that we think are going to affect the market, apart from the loss analysis that we present every year. You rightly said that we've had a 57% drop of total losses. This is about vessels above 100 gross tons in the last decade or so. Still, if we are having 55 losses a year, that's 55 too many. So we need to be aiming for zero losses, which probably is an ideal scenario. But how do we get there, and what is the key issues today that are plaguing our industry? I think one of the key concerns, I would say, at least from the insurance industry, we have highlighted repeatedly in the last few years, is the increasing size of the vessel and how it impacts the casualties. Now, the size of the vessel increase isn't a problem in itself, because that's a function of economies of scale, and shipping industry has always worked on that basis. It is one of the cheapest modes of transport simply because we have economies of scale. So a natural progression of that principle is that the vessel size increases. However, the problem becomes increasingly complex and costly when these ultra large vessels are involved in a casualty or an incident. And George mentioned the global supply chain crisis, and I'm pretty sure Ever Given itself has a small part to play in creating adding to that global supply chain crisis. But the key problem that we face today, and what we see, is fires on board vessels. Now, we all know that if there is a fire which starts on board the ship, the best chance we have to contain a fire is within the first few minutes if we can address it. But imagine trying to find a fire on a 24,000 container to use ship, and then trying to extinguish it is another problem. So in the last 5-7 years, we've seen some major incidents and casualties involving hundreds of millions of dollars per casualty in this space itself. Vessels like Yantian Express, Maersk Honam, Zing Kingston, Express Pearl, all of these come to mind, where these were involved in huge fires and massive loss to the insurance industry and shipping industry in general. And the fires are not only restricting themselves to container vessels, because container vessels is one of the key problems because of the size, but we have now a new concern when it comes to car carriers and ro-ro vessels as well. You would all remember the infamous Felicity S, which went down at the bottom of the sea after a tragic fire, taking 4,000 luxury cars with them. I think the cost of the cargo itself was roughly attributed to be $350 to $400 million. And then if you take the example of the Golden Ray, which went aground in the United States a couple of years ago, the salvage and wreck removal operation of that vessel itself has cost the industry as much as 700 to 800 million. Now, these are astonishing and very, very big numbers when it comes to a single vessel, a single disaster. And we, in our safety and shipping review, we tried to estimate what would be the cost of an incident where two ultra-large vessels are involved in a casualty, and there are wreck removal of not one but two of these vessels. And we unfortunately came up to a number as much as close to as $4 billion could be the cost of such a massive removal if the incident happened in an environmentally sensitive region. I mean, this is the worst case scenario. Hopefully it'll never happen. But we have a precedent here. The Costa Concordia cost the market close to $2 billion when it went aground in an environmentally sensitive region. So the problems at the moment the industry is facing, especially insurance industry, is one of the enhanced and exponential increase in exposure that we have today. This is a change of risk profile that we see overall as we go along into our journey. Now, to maintain, and circling back to what we said in the early part of the discussion, that to maintain and even reduce those total losses from 55 to maybe 45 to 35 to zero in the next decade or so, we need to ensure how we can keep a tab on these emerging and changing risks. I know Patricia is going to talk about climate change a little bit further, and that will bring its own risks and challenges to our industry, especially in terms of the alternative fuels that we are going to be using, or which will be required for the industry to get to net zero by 2050 if we have to get there.
I'll turn it over to Patricia to get a view on what the ESG landscape is, and how insurers are addressing these challenges across the board.
I think that now sustainability in the past 10 years got to a completely different level. Sustainability started to become the center of the discussion with our clients, but especially with our employees. We have at the moment also a lot of pressure from regulator and authority. I'm sure you are all familiar with the EU taxonomy for sustainable underwriting portfolio. And we need to prove that it's not only about stating nice thing on report, but it's really very much about then proving and tracking our commitment. The Poseidon Principles are in reality something very, very straightforward and simple. This is a global framework for assessing and climate alignment of our hull and machinery portfolio. It's really important that we remember this. It's applied at the moment to hull and machinery only. There is no P&I, there is no cargo. What is the objective? The objective is really to create a common global baseline that everybody can use. Worldwide, this is a framework that applies, that is consistent, and that is measurable. The environmental factor that are used by the Poseidon Principle is, for the time being, climate only. We have signatory and affiliate, and we can decide to expand it further. But at the moment, it's really the measurement of the climate alignment of our hull and machinery portfolio. There is an expectation to investor and insurance provider to play a role in supporting this transition. I do not have an answer that I can share for everybody as industry, but definitely this is a challenge that we will be facing in the future, is to prove that we are relevant and that we as insurance company, we are playing a role, as you said, Rafael, in making the world more resilient and more inclusive.
What particularly strikes me is, how exactly are these, Poseidon principles going to be put into place? And perhaps if I draft Jarek into this and get your thoughts on, I guess, more from a data and technology perspective, where is the industry headed, and what are some of the themes or ideas you guys at AXA XL are certainly thinking about at this stage and beyond?
In terms of the data analytics, I mean, this is the brilliant question, because this is the area actually we're working very much inside our organization. So the entire story, of course, there is much more to it, but I can just briefly paint the picture what happened during the COVID. And I think the COVID was the trigger of many different situations, and the humanity and also insurance market learned a lot from what happened during the COVID. I don't think we were prepared from the different angles. So looking for a shipping industry, I think the first thing which pops up is actually the aggregations, because out of the sudden the entire supply chain slowed down because the port were not operating at the speed they're supposed to. And the many ship operators, they lost the contracts, oil and gas was going down. So actually it created the environment when a lot of vessels were put on the, what we call layup. So the layup, the vessel was put actually aside, sometimes with a crew, sometimes without a crew. And the question came, do we understand our aggregation? So if you are in the company, which is one of the major insurer of the cruise and passenger vessels, then you're talking about the multi-billion exposure in the certain probably geographies. And those questions were coming to us as well. And we were like scratching our head and saying, wow, we don't know, because you cannot ask on the daily basis, where are all the vessels? But, like having the access to data, to API ingestion, which we also subscribe to, we created, I'm not only talking from the AXA XL perspective, but I think many other companies as well, we were able to create the platform, the dashboard, or whatever you name it, which actually allows us in the real time to track the vessels. So at any given moment, you are aware, we could assign the value of the vessel to the location. And based on this information, at just the snap of the fingers, we could find out what is the aggregations. And of course, to your question, Rafael, about the decision making. Of course, decision making is much easier if you know how much money you put on the table, and there is a potential hotspot, because if there is a natural catastrophe event, you know what you can lose in any given moment. And then, of course, underwriters, and I'm not trying to make any underwriting sort of the comments here, but they know how much reinsurance they need to buy, for example. And the reinsurance company, which is staying behind the insurance, they also feel much comfortable knowing that the main carrier actually knows what is the main exposure as well. So I think from the aggregation perspective, the data plays enormous role in the underwriting processes. The second thing is actually, and we know that some companies actually automated the process of entering the war zones. We know that any vessel which operates in the war zone is subject to the different coverage, which is the war coverage, and this is again the subject to additional premium. So So on the backbone, you can build a process which actually automate all them. I don't want to call breaches of the war zones, but actually entering the war zones. So actually it allows brokers or underwriters actually to monitor when the vessel is in the war zone. And also, coming to the elevated risk profile of such a vessel, that absolutely makes sense. I will only make a little bit comment on the sanction, because this is an area which is very legal, but it comes back to the sanction as well. This sort of the geopolitical environment is changing on the very fast pace, and you can also track the vessels which are sort of the breaching sanction or entering sanction zones, which is much easier. And to the comment, I think George made the comment about dark activity on the vessels which are coming dark, and again, we're talking about the data. So no data is also information. So if the vessel goes dark, that something probably goes wrong, and not only that the vessel actually is in the breach of the flag requirements, because the SOLAS actually requires that AIS system is permanently switched on. So it must be good reason to switch this off, where there is the legitimate reasons, especially in the piracy-prone areas. The captain has a full authority actually to make these to make this decision and switch off AIS, put the entry in the logbook why the situation happened. In many other cases, it may happen that the reasons are really bad. Illegal fishing is another reason. So no information is also information, and I think this area should be very carefully watched going forward. But these two things actually, which I mentioned, the aggregations and the claims processing, I think has a huge future.
Just wanted to go back on the weather bit and perhaps draft in Rahu on this. I think from your report, you mentioned 13 weather-related events and losses from 2021. How do you see that playing out, sort of looking at, the losses and the ages of the vessels that are out at sea? Are we likely to see a change in those numbers over the coming years?
Well, I think there's a direct correlation to the age of the vessel with the losses, whether it's total losses or incidents or casualties. We've seen this over the years, and it's an obvious correlation because with the age, the vessels require a lot more maintenance, especially when the special surveys arrive on 15, 20, 25 years old. That requires the owners to spend a lot more money. And spending money on a vessel, we all know, is a function of the markets, how much the markets are working in. And that unfortunately is an area where there is a bit of cost cutting that happens. And then, of course, there's a natural wear and tear of the vessel. So combine these with what we've seen over the weather, and I think ties in nicely with if anybody needed a little more evidence of climate change impacting our daily lives and shipping. In fact, 13 of the total losses of 55 were related to extreme events. So I think the age of the vessel is really impacting the losses. Having said that, I think not all older vessels are susceptible or are poorly run or will have losses, because a lot of good owners are making sure that the operations, a very well-knit operation, very tight-knit operations, quality operations, offset the age of the vessels. And there are still very, very good vessels which are 20, 30 years old as well. So I think overall, as we go along, we will see this cycle of age, because I think a typical age of 25 years of a vessel, and then the vessel gets replaced and a new vessel starts to come in. But again, that's a function of a market. So it's a bit of a complex scenario that after 25, 30 years, you will have older vessels going out, new vessels coming in. But whether they come in or not at the pace that the older vessels go out is the function of the market and the asset prices that go along. At this moment of time, if you look at container vessels, the prices, the second-hand prices are going through the roof, simply because you can actually earn charter rates which are in the stratospheric regions.
I wanted just to put one thing actually, which always bothers me a little bit right now, and especially Patricia mentioned about the transition emission. We didn't have time to talk about the different fuels and how does it impact actually the propulsion and the engines. But My worry is that there will be less incentives for the ship owners to build the quality vessels because the lifespan is not anymore important, because the regulation is changing so fast right now that it's actually much easier to scrap the vessel and build the new vessel instead of the retrofitting. So if this trend continues, then we probably will see the bigger vessels and the vessel which have a little bit less quality. That's from me. Thank you.
Excellent. I think that fuels up for a discussion for the following sessions, and plenty to cover there, particularly the alternative fuels. But as we wrap up, I just wanted to say a massive thank you to our fantastic speakers, Jarek, Captain Rahu, Patricia, George. Thank you so much.